Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Tuesday, so we'll be looking at the New York Open, trying to understand what has been happening in the markets, what is the current expectation, and of course, from the economic calendar, we'll try to understand what we will be expecting for the rest of the day. So as I've already mentioned in our previous sessions, including this morning, the major factors influencing the markets this week are two major events. One is happening in Johannesburg, South Africa, which is basically the BRICS annual summit. So the BRICS annual summit, this will be the 15th, basically hosts a large number of economies where they get down to discuss about their individual economies and look at more cooperation, integration, and in this case, the main focus is the integration of the BRICS countries with African countries. So the key attendees for the event include the president of China, Xi Jinping. We have the Indian president, that's Modi. We have India's president, Lula. We also have the Minister of Foreign Affairs in Russia, Sergei Lavrov, the South African President, Cyril Ramaphosa, among many other attendees. So since the meeting just started today, this afternoon, we will be expecting to see some key developments happening out of that meeting. And of course, once we get any updates, I'll try to share with you guys as fast as I can through the social media channels from both FX Pesa as well as my own personal accounts. So besides this, the other key event is an annual economic policy event that happens in a place called Jackson Hole Symposium in Wyoming, US, where major central bankers meet every year to discuss their own economies. They discuss their economic policies as well as the conditions and challenges that they are all facing. So this, the one for this year will be starting on Thursday. So on Thursday is when we'll be having the Jackson Hole Symposium starting. And of course, after it has started on day one, on day two, this is when we'll be having the majority of the Jews coming in from the US Fed Chair Jerome Powell, who will be issuing a speech at 5:05 p.m. on Friday. And of course, we'll also be getting a keynote speech from ECB President Christine Lagarde at 10 p.m. on Friday. So those being the two major data points, we also have the S&P Global Manufacturing and Services PMI, which is basically a survey that shows the amount of orders that have been placed in various sectors, in this case in manufacturing and services. And it's a leading indicator of the amount or level of production that might happen in the near future. So it's usually taken as a very strong indicator showing the trends and developments in manufacturing as well as the services sector. So we'll be getting the same data for Australia, for Japan, the Eurozone, the UK, as well as the US in the same day on Wednesday. So as for today, we don't have much happening except that the BRICS summit has already started today. We saw inflation in Japan coming stronger than expected. Trade balance coming in poor in Switzerland, and for Eurozone, trade balance improving. So only two data points we'll be expecting today will be at 5 p.m. looking at existing home sales as well as the Richmond Manufacturing Index. So knowing that, and now looking at what has been happening in the markets, we have seen some major shifts in trends compared to what we were looking at in the morning. So in the morning, we had a very weak dollar, and now we have a very strong dollar that is currently retesting last week's highs. So as a result of this, we have seen major shifts happening with pound USD being completely unable to break this level and moving back downwards. And of course, Euro USD doing the same, finding resistance on this trend line and moving back, looking to retest last week's lows. And then we have USD yen resuming the bullish momentum, which could erase all the early morning losses, which basically implies we could be seeing the market retesting this area at 146.38. So a further continuation in dollar strength could also reverse the USD CAD momentum where we were expecting the double top formation to be completed at this area, but now we are seeing price pumping back higher. So we just have to be patient and see how the New York session progresses. So biggest surprise has been in gold, especially noting that we were observing this area cross ray, which acted as the resistance here early in the morning. So the market later on attempted to go higher and failed and formed a pin bar, which was the genesis for the bearish momentum we are seeing here down to the 1896 price level. And potentially, if this momentum continues, we could see 1892. So moving on to AUD USD, what we are seeing here is a market that rallied all the way to resistance. And once it got to resistance, immediately changed direction, and now we are moving some movement back downwards. So we also saw some momentum happening in US equity indices, which were strongly bullish this morning, and that hasn't changed. And now for the Nasdaq, we have a clean break of the upper trend line, especially after we saw some very strong rallies happening in NVIDIA as well as Tesla shares. So for the Dow Jones, there was a slight break of this particular trend line, but in the last 1 hour, you can see the market reversing, indicating a strong entry by sellers. So potentially we could be seeing the price going back downwards. So this is a very strong indication of a strong entry by sellers. So this could be the signal we were waiting to look for another short entry. So for the SP500, it has remained bullish. I don't think this is a major resistance level. So potentially we could be seeing the market retesting this area as earlier projected. So as for the UK oil or Brent oil, we were expecting that the market would eventually test this area. But now focusing on the candlesticks we are seeing here, we can see an increased range. And by range, I mean the difference between the high and the low of this candlestick compared to the previous two candlesticks, meaning that there is an impulse of momentum coming into these markets, long lower tails indicating rejection of lower prices. In this case, there's a chance that this might be the bottom we were waiting for, and oil prices could now reverse and start another swing towards the upper trend line. So this is a high potential that oil prices eventually bounce from this level and now start recovering, moving towards the upper side. And the key level target remains $85.7 per barrel. So US equity indices were strongly bullish earlier in the day, but now we can see that the momentum is dying out. The candlesticks really got smaller. And now we are seeing what looks like a potential reversal. So we could be seeing the market starting to erase some of the gains mid-early in the morning. And it's a similar thing for the Eurostoxx. And of course, for the UK 100, it's also a similar story. So quite bullish early in the morning, lost momentum, and it's now moving in the opposite direction. So that seems like a common thing. BTC completely flat at $26,000 after making this major drop last week. So from levels that were slightly above 28K, went all the way down to 26K, and now it's just consolidating there. So all you have to do is to map the consolidation and wait for the direction of the break. So New Zealand USD, similar to Australian dollar against the USD, was strongly bullish in the morning. And then right now you can see the trend is changing, and we are seeing the New Zealand dollar now again losing to the US dollar. So the strong dollar is causing the major change in most of these currency pairs. So going forward, trading the New York session, I would bet on the strong dollar after the change in swing. And in this case, I would expect the pound USD to continue losing. Same case as Euro USD as we retest these bottoms here. USDN seems like it would recover all the losses it had made, so potentially going to the day's high. Then we have the USD card. You can see the market changing direction here. I don't know how long that could last. But then for gold, it's a clear rejection of higher prices, similar to the previous time that gold prices were trading at that level, and now a very sharp drop. I don't think we have hit the support yet. Yes, there's some form of support at 1896, but 1892 seems even more stronger. So there is a good chance we could be seeing gold prices go for the back downwards and retest the 1892 price level. So our USD, we have seen a breakout towards the upper side. So if there's a pullback, it's most probably a retest Remember, this is a very long-term trend line. So whenever you see such a breakout, sometimes you expect the market to retest that area before continuing in the direction of the break, which is upwards. So I expect longer term or medium term, let's say from next week, to see the Australian dollar continuing to recover against the US dollar. So for US Tech 100, we know that NVIDIA is a big contributor to its performance. And NVIDIA earnings are coming up tomorrow after market close. So this could cause some more volatility. So maybe the cow is being prepared for slaughter. So sometimes you see this happening, the market making a very strong rally. And then after the announcement of some news, then you see the entire move being reversed. So this could be a potential prey for US Tech 100. So as we progress further with the week, I would be very observant about the current price level to see whether it's a permanent gains or if it's just a temporary break and the market gets right back into formation. So we don't know this yet. So it's a matter of being patient, wait and see. So USDAT is already showing signs of momentum. So perhaps it's the premium opportunity to trade back down to 34,255. US 500 already showing signs of weakness, but I expected to see some resistance around 44.50, not right here. So Brent oil showing some signs of bullish momentum. So potentially a rally could start from here. And of course, as we progress, I want to know if there's any questions and try to respond to those questions. So hello, Peter, and thank you for joining the session. I appreciate having you in the space. Awesome. So I don't see very many questions. So hopefully everyone got to grab something from the presentation. It will be pretty short for today since we don't have a lot of things happening in the markets today. But now we already know the key events to be following for today and for the week. And of course, later on in the afternoon, we'll be having a couple of speeches from our Fed members. So these could have some impact in the markets. So we have a speech from FOMC member Goolsbee at 9:30 p.m., FOMC member Bauman at 9:32 p.m., and of course, another speech by the same guy, FOMC member Goolsbee at 10:30 p.m. So these three speeches could potentially have some impacts in the markets. So you have to be aware of that. And if you can just follow through the proceedings to see if there is any hints about economic policy. So hello, Jack and John. Very quick question here. Also, hello, Rebecca. The question is about DXY on MT4. I believe it should be the same as MT5. So it should be USD index, dollar index, USD index. That's the name of the dollar index symbol on the MT5. I'm hoping that is the same for MT4. So clearly, with a very strong dollar happening here, then with the dollar looking to retest last week's high, then the pound USD should be retesting last week's lows, or at least let's say Monday and Friday's low. So some more downside momentum is expected. And also note that this was a major resistance level for the pound. So after failing to break, we saw the important break towards the lower side. So for Euro USD, still more momentum to be found. So perhaps a move below 1.085. So somewhere around 1.084 could be achieved within the day, especially considering the strong bearish momentum we are seeing here on this chart. USD going for the day's high, just erasing all the earlier losses. And gold continuing to move down lower. We're already seeing it happening. So going for the 1892 price level. So thank you very much, guys. And I hope to see you on the next session. So remember, there's a new episode of the Bullish Banter podcast coming tomorrow. So make sure to tune in on your favorite podcast platform. This can be YouTube, it can be Spotify, Google, and Apple Podcast, as well as TuneIn. So at the same time, we'll be having another market snapshot episode tomorrow in the morning at 11 a.m. Remember, the snapshots happen every day at 11 a.m. And of course, on Thursday, we have Market Pulse episode coming up at night. That is basically 8 p.m. So this is going to be quite a busy week, and we are prepared to give you all the updates in time, as well as the analysis, so you can make your own informed decisions in your trading. So as we approach the end of the presentation, there's one critical question from Calvin's, and I think it's important I respond to this one. So how does the change in interest rates affect bonds? So what basically happens, let's use an example of the US since last year. So since last year, the US interest rates have been rising. From March, they were around 0.1%. And currently they are at 5.50%. So that's the fastest rate hikes we have ever seen in history. So with the interest rates moving higher, it basically means that also bonds are priced higher. So when you look at US 10-year bonds, you look at 2-year bonds, 1-year bonds, they're all yielding between 4 and 5%. So what this means is that if the bonds are offering very attractive yields that are close to the interest rate at the time, then as a result of that, it creates a higher demand for the newly issued bond, but then a lot of supply for the older bonds. So if you are holding onto a bond last year that was yielding, let's say 0.1, 0.2% in a year, that bond kind of loses value because other bonds that are being issued right now, they are promising to pay a much higher amount. So as a result of the liquidation, it basically increases supply. All those guys want to sell those bonds and buy the new ones, which basically drives the yields higher. So we are seeing the yields crossing the 17-year records. Some of them are crossing 20-year records. And this heavy demand for these bonds is basically even driving the yields higher. So with higher yields in the bond market, and a lot of banks that were holding the pre-COVID bonds, basically holding onto massive holes, or what we call unrealized losses, then it's brewing in a crisis of a potential credit event. But then the Fed was able to seal this crisis by creating a BTFP program where bonds held at par with these banks can be borrowed against at the same level. So if you're holding a bond that matures in 10 years and it's currently experiencing an unrealized loss, you can trade it for a short-term credit with the treasury, and you'd get that cash and you'd be able to honor your bills, but still you have a problem if interest rates remain high and you're not able to get out of that position within a short period of time. So that's what's currently. So there's still a crisis brewing in the US commercial banking sector. But then at the same time, there's also the question of how does this affect the currency? So as long as the Federal Reserve continues tightening policy, which basically means hiking interest rates, then the currency will remain strong as more and more investors basically drive their money into bonds, which are seem to be having little or no risk. Yes, we know they have risk, but according to traditional investors, they think that these bonds don't have risk. So in so doing, because they know that the US government will never default on its debt, they'll just park money with these bonds. They'll basically hold on to the bond certificates, and the government will use the money to spend on more or other stuff. So as a result of this, we are seeing an increased demand for the dollar. And as the dollar strengthens against other currencies, like in Kenya, you see individuals, wealthy Kenyans, investors, basically converting their Kenya shillings for the dollar to avoid the losses that they have been experiencing with the Kenya shilling. So it's the same story across board. So most of the economies are basically abandoning their currencies and buying the dollar since they deem the currency to be stronger, especially because it's yielding a higher interest rate. So that's currently what has been happening. And with a higher interest rates, bonds will continue being worthless or basically losing money. In the short term, bonds that are currently being issued will continue yielding very good demand, very good yields, and as a result of that, getting some very nice and high demand. So thank you very much, guys. Thank you, Calvins, for the question, and I hope to see you guys on the next session. So enjoy the rest of your trading day. Hope you have a successful New York session. And as always, this is not investment advice, neither is it a recommendation to trade. So always do your own due diligence and practice proper risk management.